Hi, welcome back to another edition of Flippers Fund Flows Insight. My name is Tom Rosine. Thanks for joining me today. I'm going to be reporting flows primarily for conventional fund business for the week ended June 24th, 2015. That's a Wednesday time period that we're going to be looking at. And we'll be talking a little bit later on about ETFs as well. Investors injected about $2.8 billion into the conventional fund business during this flows week. It's the first week in three that we've seen in flows, and we really had kind of a rocky road. First, we had some concerns that about Greek debt, and actually the first day, Wednesday, we actually heard good things about Greek debt. They were in conversations. Things look like they're going to be resolved by Thursday. The next day, actually we heard that it was off the table, and people were concerned. So Thursday and Friday were not all that good as far as performance goes. And then we had a very good week on Monday and Tuesday as far as numbers go. And we actually had a biotech rally. We saw the NASDAQ and Russell 2000 actually hit new all-time highs. So really it was a very strong week as far as new events went on, but everything was at the margin. It was just kind of ups and downs and ups and downs. We saw two big 300-point days for the Dow, and basically we ended on a sour note when we heard that, in fact, the Greek government did not come to an agreement with its international provider of debt, and so people actually bailed on it, and so they were in search of safe haven plays to go into, both on fixed income and money, and this is where we're going to see the money flows. Let's take a look at the macro group to see what flows actually occurred from this news that we heard. Equity funds lost about $2.1 billion. They saw that come out of their coffers. Taxable bond funds, though, again, this was that safe haven play. People were going about $1.2 billion into the taxable bond funds. Then we take a look at muni bond funds, down in the hundreds of millions of dollars, really almost around an area. And then kind of the big area that we saw people put money into, it was money market funds. About $3.8 billion in that new money came into money market funds. We haven't really seen that for a while. Again, this is more of a safe haven play. Let's see how it broke out, though it really was a tale of two cities when we start taking a look at the different groups within equities. Equity funds are basically the first area we're going to take a look at. They actually had a plus side returns. Remember I told you it was a pretty big week as far as ups and downs go, up about 0.79% from Wednesday to Wednesday. First week in five, we've seen plus side returns, and then we take a look at the outflows, $2.1 million out, or $1 billion out. This is just one of those situations where people are ready to go sit on the sidelines. They don't know how bad the Greek debt crisis is going to be, if it's going to knock people off, the market off its kilter, or if it's going to be a non-event. I think most people think it'll be a non-event, but nonetheless, it was the second consecutive week we've seen outflows because of this, and how it broke out was kind of a different story. Domestic equity funds saw a lot of money go out, about $3 billion leave their coffers, and we saw that it was the 21st consecutive week they've seen outflows. Now we take a look at the non-domestic equity funds. Remember we had Greek situation. By the way, I didn't even talk about China. China saw some of their worst performance that they've seen, 1 week returns in 7 years, and we still saw flows go into the non-domestic group. About $900 million went into that group. Not much, but again, just considering the situations, 12th consecutive week that group is taking the money. How it broke out: large cap funds and equity income funds lost money. Large cap funds basically saw about $1.7 billion leave their coffers. Equity income funds saw about $900 million leave their coffers. But when we get on the international side, world equity side, we see global equity funds actually took more money in than their international counterparts. About $600 million for global. International equities saw about $300 million. That's a little bit of a change. Most people making bet on the international sides, maybe they took into account the impact that emerging markets and particularly China would have on the returns and the like, and so we probably didn't see all that much money flow into that group. Let's take a look now, though, at the equity ETFs. It's a whole different story there. Fifth consecutive week we've seen money go into that group, about $1.1 billion. iShares Russell 2000, remember I told you there was a biotech rally. iShares Russell 2000, so about $2.3 billion come in. PowerShares QQQ Trust 1, so about $800 million come into that group. So again, it was a pretty big move in there. However, here's where the people were faltering a little bit. S&P 500 saw about $2.2 billion in outflows, and if we take a look, we saw financial select sector Spider actually lose some money as well, about $500 million leave that group. Well, let's take a look at the fixed income. I think a lot of people will be amazed at what happened in the fixed income. Fixed income group for the first week in three saw inflows, $1.2 billion come into that group. It's the second consecutive week that we've seen plus side returns, although it was only 0.10%. Hey, it was on the plus side. One of the things I generally don't mention, and I'm going to mention it here, some of the big flows that we saw come in were in the balance funds, about $1.6 billion. I'll be honest with you, the old AMG database put that money, balance funds, into fixed income. I should think it should be in equity. So on this slide, you see that I reported flexible income funds actually took in the largest amount of money of fixed income funds, $0.3 billion. And then we take a look at high yield funds. Oh, by the way, that's the 18th consecutive week that they've actually seen inflows. So that's a pretty big study that people are going to start putting money to work in those higher income areas if they possibly can. On the bottom side, though, high yield funds saw about $668 million in outflows. That's a pretty big number. And corporate investment grade debt funds saw about $133 million in outflows. And that's the first week in 3 that they've seen outflows. If we take a look now on ETFs, here is where it's a complete different story. Really, they wrote a whole different channel here. On the top of the group, we saw that ETFs took about $2.2 billion in for the week. And it's the first week in 5 they've seen really strong inflows like that. But iShares, iBox, High Yield Corp had the biggest inflows, $1 billion. We take a look at the Spider Barkley High Yield Bond Fund ETF, about $500 million. So really, people were making bets that this would happen. And if we go down even further, we start seeing treasuries come in. So ETFs were, again, authorized participants were willing to put money back to work, but they were putting money back to work, I think, where they think they can make the most money as far as having us do that. So safe haven plays, they built up treasuries, and then on the flip side, they created inventory for those people looking for high yield type of instruments where they can get a higher yield. In fact, if we have interest rates stay flat for a while. So that certainly was that story that we saw. At the bottom of that group, though, again, we see the Wisdom Tree Bloomberg US dollar bull actually lose the biggest amount of money, and that was almost nothing. It's about $200 million in that range. Let's go ahead and move to Muni bond funds. Muni bond funds are our next group, and they saw about $148 million, 8th consecutive week of outflows there. It's the 3rd week in 4 that they've had negative returns, 0.04%, really not a lot to talk about. National Munis basically handed back about $76 million. It's 8th consecutive week they've seen outflows. For munis, it's been kind of a ho-hum period of time, and I think investors are just kind of in a wait-and-see area of what's going to happen to the treasuries and the like, and people are just kind of concerned about interest rate increases and maybe even looking more towards equity-esque type of returns with other products. So maybe that's what they're looking at. Our last group, money market funds. Again, this is where I said we saw some inflows. Money market funds for the first week in 3 saw inflows, $3.8 billion. How this broke out, taxable money market funds saw about $6.2 billion on the inflows, while tax-exempt money markets saw about $2.4 billion in the outflows. On the money market side, though, the taxable money market side, how it broke out, we saw about $6.2 billion come into the institutional share classes. For the group it was $6.2 billion. We saw about $4.8 billion come into the institutional share class and about $1.4 billion come in on the retail side. So everybody was using that opportunity to park money and put it in there. Well, that is it for us as far as flows go today. And the one thing that we saw come out yesterday that I thought was interesting, we saw personal income and consumption actually increase 0.5% and 0.9% in May. I think that's going to be a boon for the markets, and so we'll have to see if that carries over. All this is very dependent on what the final agreement is with Greece and what the Eurozone and the European Central Bank and also the IMF are going to do as far as the loans go to Greek. Are they going to allow them to kick the can down the road? Or are they going to finally do a Greek exit, and let them actually try to repair their wounds and move on and get things rolling? Certainly, I think the sooner we get this done, the better off we're going to be. And I think we're going to see it's going to be just like when Detroit had their bankruptcy. It's going to be a non-event overall. Maybe short term, but over the long term, it's going to be a non-event. Anyways, if you want to do a deeper dive, you can go to our site, lipperusfundflows.com. and choose an area that you want to do. If not, you can meet us next week where one of our analysts will talk to you about the flows for the week. Thanks for joining me. My name's Tom Rosine, wishing you the best in your wealth planning and creation. Thanks for joining me.